Let's talk about money and resources.
Welcome to the Investment News Show, where you can get the inside line on U.S. economic development.
Today, the United States ratified the North American Free Trade Agreement between Canada, the United States, and Mexico, marking the beginning of what we predict will be an era of globalization.
Just before signing the pact, President Clinton remarked that, quote, NAFTA will tear down trade barriers between our three nations. It will create the world's largest trade zone and create 200,000 jobs in this country by 1995 alone. The environmental and labor side agreements negotiated by our administration will make this agreement a force for social progress as well as economic growth, end quote. However, it remains to be seen whether these impacts will truly be realized.
Increased globalization is pointing towards a more unified world economy where resources flow without barriers, leading to increased trade and commerce. We will just have to wait and see whether this will lead to an industry moving to countries with cheaper labor, causing an increase in unemployment in the United States. In the meantime, expect economic growth through increased trade.
Welcome to the Investment News Show, where you can learn about the best technology stocks to invest in.
Tech company stocks are seeing a dramatic rise and it's beginning to seem foolish not to invest in them. According to the LA Times, if you invested just $5,000 in Dell only 10 short years ago, it would be worth over $4.5 million today. There seems to be no end in sight to the increase of technology company stocks as more and more consumers begin to use the internet.
Indeed, everything from Microsoft to EMC Corp has been going up lately, and the faster you invest, the more profit you can make. I personally have invested over half of my net worth into technology stocks and am confident that they will yield large returns.
Welcome to the Investment News Show. Alexander and Yoel are no longer working at the show due to slight imperfections in their press.
The dot-com bubble has burst and hundreds of internet companies have declared bankruptcy. As the New York Times had said, unlike the worrisome decline in the stock prices of solidly grounded technology firms due to a slowdown in profits, the sharper plunge taken by some of the trendy internet companies that had no earnings in the first place has proved comforting to those who believe in the rationality of markets. Many internet companies like Priceline and Pets.com have had no profits or business plans and simply relied on investor funding to inflate their valuation.
The bursting of the dot-com bubble has proven that there is no magic way to make money.
Welcome to the Investment News Show.
The economy looks to be on the up and up again, and real estate is booming. In this year alone, prices are up by 11.2%, and in California and Washington, D.C., prices have risen by more than 20%.
While some of you may be concerned, Alan Greenspan, former chairman of the Federal Reserve, has stated that although a bubble in home prices for the nation as a whole does not appear likely, there does appear to be, at a minimum, signs of froth in some local markets where home prices seem to have risen to unsustainable levels. This means that, although there may be some localized defaults, the national housing market is stable.
If you have the money to spare, we suggest investing in another property as values continue to rise. In addition, you may want to consider investing in mortgage bonds.
Mortgage bonds are collections of thousands of mortgages, which reduces the risk to nearly zero. Universities and pension funds, which only invest in the safest securities, have invested heavily in mortgage bonds.
If you want a more rewarding but slightly more risky loan, consider investing in the subprime market, where defaults are slightly higher but returns are larger.
We've both invested heavily in both real estate and mortgage securities, and we encourage you to do so as well. The sooner you buy, the more money you'll make.
Welcome to the Investment News Show. The economy has taken a turn for the worse, and unlike the recession at the turn of the millennium, this one seems to have far deeper repercussions.
The steep rise in mortgage defaults leading to home foreclosures in 2006 through 2007 has been the main factor which has wreaked havoc on the American economy. Catalina M. Bianco, a CCH writer analyst, has stated, "Consumer spending is down, the housing market has plummeted, foreclosure numbers continue to rise, and the stock market has been shaken. The subprime crisis and resulting foreclosures fallout has caused dissension among consumers, lenders, and legislators, and spawned furious debate over the causes and possible fixes of the mess."
An estimated $945 billion have been lost as of March of this year, and actual losses are reported to be much higher and not limited to the United States alone, instead reaching overseas investors in the UK and Europe as well. Some have accused Greenspan for planning the bubble with an awareness of the resulting effects, while others link the crisis to a partial repeal of the Glass-Steagall Act in 1999.
No matter the cause, this economic crisis is the most desperate that the nation has seen in years, and it has yet to be seen the overall effect that it will have on America and the world as a whole.